Welcome to the Rowe Report, a podcast that brings you the latest news, exclusive interviews, and valuable insights from the region's top real estate leaders. And now, our host, Elizabeth Rowe.
Good morning, everybody. Welcome to the Rowe Report, where we help agents like you think, feel, and act like a pro. I'm your host, Elizabeth Rowe, the broker and owner of Rowe Real Estate.
My name's Adam Robinson. I'm the station partner here with Business RadioX in Northwest Arkansas. Elizabeth, I'm very pumped about today's episode. Your guest is one of my favorite people.
Oh, that's exciting.
Yes.
Yeah.
I
mean, he's a pretty great guy.
He's a pretty great guy. I didn't know he was coming on until late last night. And when I saw it, I had to tell my wife the story. I was like, hey, this is actually a podcast you're going to want to listen to.
Absolutely. We got some great content planned.
Yeah. So for the last couple of weeks, we've been talking about how it's really important to have certain relationships in your life, especially if you're a realtor. Let's see, we talked about the relationship with a short-term rental person. We talked about the relationship with a mortgage banker. We looked at a lawyer last week, and now we've landed on that key relationship of an insurance person. So why is an insurance person necessary if you're a realtor out there building a business?
And it's another piece of the puzzle. So a majority of people, about 70% of people get a loan when they purchase a property. So they don't pay cash. And when you pay cash, you have options whether or not you get insurance or not. But if a bank is going to insure the property, they're going to want to make sure that if something happens to the property, that you're able to have it fixed, i.e. if you end up defaulting on the property, they don't get back a burned down building or something like that, right?
Yeah.
And so, 70% of the time, it's going to be a requirement of the contract. So first and foremost, it's generally a requirement of a contract to be able to get insurance. So that's the first reason. The second reason, I think, for me personally, is that having somebody on the other side when things like a roof repair comes up. Let's say that it goes through inspection, there's a roof that needs to be repaired, replaced, something like that. The homeowner has to make a claim. And then you've got to coordinate all the stuff before closing or even sometimes after closing. The buyer can't buy the home and get insurance on the property if, without a new roof, things like that. So a lot of deals really kind of hinge on the insurance piece.
Okay, well, let's go a little deeper in that, specifically with the relationship piece with the insurance person, because a story I want to share with the listeners last night is Elizabeth and I were communicating about the show today. I asked her, okay, well, who's going to be your guest? And it wasn't just an insurance guy, right? Her to quote her in her text message, it was my insurance guy, and then she followed up a picture with the guest today. So let's look at that, right? Because I think that once you begin to build a relationship with someone in the insurance industry, they do become your insurance guy or your insurance girl, or insert whatever pronoun you'd like to there. Why do you think it's important as a business owner yourself that we have someone in the insurance industry that we're familiar with and that we've built a relationship with?
Well, really, Adam, from my experience, having a good relationship with someone in the insurance industry, it can be looked at two different ways. The first one is really for the benefit of your customer. You don't want to refer them to someone that's just sitting in a call center somewhere in Maryland.
That makes sense.
Right?
Yeah.
And, secondarily, it's something that we've talked about a lot, and it's the power of a referral. When I refer someone, I'm putting my name that I've spent over 20 years building, a reputation for. And so it's an extension of the referral. And so it's good to be able to have somebody on the other end to receive that referral that is also someone that does business the way that you do.
Absolutely.
They provide the same level of customer service that you do. They provide the same expertise. And so you can feel confident in making that referral and knowing that you're giving your client a name and a phone number of someone that's going to take excellent care of them before, during, and after transaction.
Sure. Well, and when you look at the fact that when we're calling our insurance guy or our insurance person, it's probably a fairly uncertain time, right? Like there's been a fire or a theft or there's been an accident of some kind.
You're already, when there's a claim that has to be made, tensions are high.
Yeah.
So you want somebody on the other line that's a real pro.
Yeah.
Not just can click the right buttons and help you make a claim, but someone that can make you feel confident and comfortable in proceeding through whatever it is that needs to get done.
I love it. Elizabeth, as always, you've set the table well for us. We're going to go ahead and pay some bills with just a couple of commercial messages. And when we get back, you'll get to meet Elizabeth's insurance guy. And he's got some great lessons for us today. So my name's Adam Robinson. This is Elizabeth Rowe. We'll be right back after these messages.
Are you ready to become a true hometown hero? Join our exclusive program at Northwest Arkansas Business RadioX and make a lasting difference in our community. With your Hometown Hero membership, you'll not only be invited on 2 separate podcast episodes over the life of your 6-month membership, but you will also enjoy a well-deserved recognition at every event sponsored by Hometown Heroes. Don't miss this opportunity to shine. Join today for just $99 per month and let your heroic spirit ignite positive change. No commitment required. Cancel anytime. It's Hometown Heroes with Northwest Arkansas Business RadioX. Get ready to dive into the captivating world of real estate with The Rowe Report, the brand new podcast that will keep you informed and inspired. Join host Elizabeth Rowe as she brings you insightful conversations, expert opinions, and inspiring stories from the real estate scene in Northwest Arkansas. Whether you're a real estate professional seeking to expand your knowledge or simply interested in the fascinating world of realty, this podcast is tailor-made for you. Elizabeth's passion for the industry and her commitment to delivering valuable content will ensure you gain fresh insights and a deeper understanding of the real estate market in Northwest Arkansas. Be sure to join us for each and every episode of The Rowe Report each Wednesday at 12:30 p.m. exclusively on Northwest Arkansas Business RadioX.
Welcome back, everybody, to the Rowe Report, where we help agents like you think, feel, and act like a pro. Today, I am so excited to introduce my guest, Sean Simons with Lighthouse Insurance. We're going to be talking about homeowners insurance, commercial insurance, and anything in between. So welcome to the show, Sean.
Thank you. Super pumped to be here.
Yes, absolutely. And I'm really excited. A little shout out to Adam. We've got a new studio set up, and it's beautiful, isn't it? Yeah, I'm loving it. Yes, he really has. He really has. Well, tell me, Sean, so when I first got my first homeowner's insurance policy, I was about 22 years old. And the only things that I was really worried about was, how much is this going to cost me? What's the deductible? How much, what's a premium even? What do you mean an underwriter? I didn't really understand the ins and outs of insurance. I just knew it was something I had to have. And I hated that I had to pay for it, right? Which is most people. Sure. So can you kind of explain to me, like I'm a 10-year-old, how insurance works, what it is, why it's important, and why, you really should take a look at that policy that you send out when you get one. Yeah.
Absolutely. And you're hitting on the main topics, right? That's the things that I sit down and I visit with clients. There is a huge knowledge gap, right? Unfortunately. We all like to think that we're educated consumers, but when you get into the field of financials, legal liability, asset protection and mitigation, we get into attorney level things where your average consumer just doesn't have that knowledge base. And so that's where the agent becomes so valuable, just like in real estate, where the consumer is really relying on the expertise and the professionalism of their agent. And so try to be a student of the game and be that professional and be very knowledgeable in my own. Insurance is just risk mitigation. And at the core, it's predicated on something that most of us are probably not real happy about. It's not individualized in certain aspects. So my insurance would be way more expensive than I could ever afford if it was just predicated on the parameters associated with me as an individual. I would never be able to afford insuring the things we have. We live in a society where we purchase things that we can't afford. And so we're pushing out payments months or years out into the future. And so because we don't know what's going to happen to those assets while they're with us, especially when they're owned by banks and financial institutions. We have to have some kind of mechanism that ensures that they're going to be there when the payments are made and they finally become ours.
That's good.
And so with that kind of financial risk, the average person just can't take that on their shoulders. And so insurance is predicated on this whole, I don't know if you know the mathematical term of the law of large numbers. And so you spread risk around. Everybody pays into the pie. Mm-hmm. Only the claims that are needed are paid out of that pie. So, a lot of people are like, hey, why am I paying all this money? I never had a claim and I wish I didn't have to.
Right.
That is something you get daily, right? Several times a day. And that's natural. Right? Yeah. We are very individualized in our society. We want to be accountable for our own things.
Right.
That's what
not somebody else's
actions.
That's
what we're taught to do as adults. But insurance is actually the complete opposite. It is almost socialism in risk mitigation. So we're all going to pay into this, and only those that have claims get to benefit.
Right.
But eventually we'll all benefit. Right?
Sure.
So auto claims, for example, right. I think it's like every 3 to 5 years is kind of the statistical likelihood that you're going to have some sort of auto, whether it's hull damage, fender benders, or catastrophic car accidents. Homeowners are like 7 to 8 years.
Really?
And that varies by state and region, geography, things like that. So at the core, insurance is really predicated on everybody sharing that risk so that it's affordable.
When your 3 to 5 years comes, or 7 to 8 years.
And some people are I actually had this conversation yesterday evening, right before we came and had a great time at your little happy hour networking, which was awesome. I had a conversation with somebody and they said, we haven't had claims in 12 years, 12 to 15 years. And I know where she was coming from of like, hey, I'm a good risk. You should give me a discount. But mathematically, you're due. You're overdue.
Yes.
And so when you say that,
you're more risky.
That's exactly it. She was like, hey, I should get a discount. I'm a great risk. And I'm like, statistically, we're going to take a loss on you. Like, we're probably going to take like 6 to 8 months on you.
Yeah.
And so that's just something that most of your everyday clients that come in and they're looking for a policy, they just don't think that way.
Right. Man, that's really good. That's really good. So the idea is, what I hear you saying is, everybody pays in to benefit the whole, and it's just when your lucky number
your ticket comes up,
that's how you benefit.
That's it.
Right. And if we just paid based on our own personal risk assessment,
right,
it would not be affordable.
Yep.
Okay. Well, that makes sense.
Cost prohibitive.
Yeah. And I know a lot of people feel like it's that way now anyway. Yeah. So I can see how that can be a problem.
One conversation I like to have that kind of helps put that into perspective. We hear all kinds of cliches. Oh, the insurance companies are the only ones getting rich, right?
Yeah.
In different markets, everybody has their kind of profit margin. It's a good, healthy business might have a 10% profit margin. And I feel like roofers, all my roofers out there, I'm sorry, but you guys have some built-in margin. They're making great money.
They do provide a great service.
They do provide
They do call it putting a roof over your head.
That's a great call. But the insurance market is only 2%.
Oh,
that's the margins. Super thin, razor thin margins. And unfortunately, what we're seeing in the industry right now is catastrophic. Mother Nature is just not being kind, especially in certain regions, and the Northwest Arkansas being one of them.
Right.
But we're seeing insurance companies that are just upside down, especially in home and autos.
Wow.
And so as an industry, we're very, very volatile time right now. And you have carriers that are pulling out of certain states and not writing business in certain lines.
I've heard this about places like Florida and
California.
Yeah.
Arkansas might be that. We have wind and hail. That's our number one claim in this area. The wind and hail is just brutal.
Makes sense. Like when you're talking about, a spread or, what kind of return an insurance company would have on per year, when you think about, even if you just thought about one neighborhood that was hit by hail, right? Say you had 100 homes in a subdivision and all of them had roof damage, right?
Yeah.
And you're looking at, what do you think an average is for a roof repair for
If you're looking
a
at
whole new roof?
if you're looking at a 2,000 square foot house, it's 15 to 20,000.
Yeah, and then you add 100 of them.
Yeah.
Yeah, so
You get up into some of our premier neighborhoods. I paid a roof claim earlier this year. It was $40,000.
oh man, yeah, I can see how it's
Gets
So
awesome real quick.
I know that a lot of people are out there screaming with their hair on fire about the cost, but what you're saying is that really, even on the insurance company side, it's it's good. It's
Not a lot of profits in the premium side of things. Insurance companies make money on their asset portfolios,
right.
When they take these premiums in, they put them into their conservative portfolios of investments.
Yes, commercial real estate.
Oh, absolutely.
Yeah.
Absolutely.
Yes. And that also helps. Does that help pay for claims? And is that where they,
Yeah, absolutely. So,
because if everybody just paid, a couple $100 a month for their homeowner's insurance, and then in that same subdivision that we're talking about, right? Like, it's not even going to cover a roof.
That's right.
That's right. Yeah. So they take the money from our premiums, they invest that money and go out and buy, say, commercial real estate, and then the income or the return on that investment is what actually is used to pay.
Yep.
Those rooms.
Now, the premium itself does help. So,
Yeah.
right? That's the first thing that gets moved when claims are higher than projected. We call it a combined ratio. So when you have an insurance company, a big corporate company, they have not only the ratio of the premiums that they come in versus the claim that they're paying out, but there's also the operating cost.
Oh,
It's
yeah.
the agent's commissions, which I'm very fond of. I want to make sure they're paying that.
Yeah.
But they're paying their back office staff, the underwriters,
Sure.
the adjusters, and all of the marketing that goes into that. And so that combined ratio is kind of their bottom line.
See.
A lot of customers and clients, right? Once they have a claim, we might never get a premium to offset that claim. And so that's where that longevity and loyalty for customers. We really want to get clients on the books. We want to take care of them. We want to hope that they're good, profitable risk, that they don't have claims.
Right.
That's great when we're collecting premiums.
Sure.
However, inevitably they will.
Every 3 to 5 or whatever it was that you said. Yeah.
Absolutely. And then once they do, that's one of the premier times where people are like, oh, well, I had a really bad experience. My agent didn't return my phone call. I couldn't get a hold of my adjuster. And
Yes.
when we were at paper, right? We initiated a relationship. We build rapport. We sign a contract, and it's a promise of a service delivered at some point.
Right.
And when a claim happens, that's, for me personally, in my agency, it's, hey, it's time to go to work.
Yeah.
We made a promise. It's time to deliver.
Yeah.
And so
Your job's
it's
not
almost-
just writing the paper.
That's right. It's a lot of agents dread claims. And of course, there's the impact that it has on our clients. We hate that they're having to go through this loss or this financial impact. But in our agency, we try to take that positive spin. It's like, hey, we get to show up.
Still do a job.
Yeah. We get to come in and ride in on the white horse.
That's
and
right.
Be not only the professional, but the education piece.
That's
like,
good.
hey,
That's good.
okay, I know you're freaking out. I got you.
Yeah. Love it.
This is what you've been paying these premiums for. Yeah. This is why you sit down every year and we make sure that your coverages and your deductibles and everything like that.
That's good. That's good. Well, let's kind of dive a little bit into those policies, right?
Yeah,
so,
absolutely.
We mentioned in the opening when I was visiting with Adam about how, it's not just a call center and we sign here, press hard, 4 copies. That really kind of dates me. I don't mean to do that. That's like when we half the people out there are like, yeah, sorry, I won't do that again. So I really want to dive into the policies, right? So say that a homeowner is, they're purchasing a house. They come to you, they say, I need to get a homeowner's insurance policy. How much is it?
Yeah.
right?
That's
And then they called somebody else and they're like, how much is it? Well, this is less. And my understanding is that, yes, some companies are going to, differentiate in price a little bit, but really when you see those big differences in premium, what kind of things are in those policies that may not be included on that lower price?
Great question. So at the core of just about any homeowner's policy, especially one that's a requirement from a mortgage company, you've got certain coverages that are kind of built into that. And so the first and foremost is your most important. It's the dwelling coverage itself. So it is the actual walls and the floor and the roof, and it's the structure. From there, you come down and you have kind of the ancillary structure on the property. So your pergolas and the shed out back and the little pool house and then all the other little things. And then you go into the contents of the house. So anything that's part of your belongings that isn't part of the house. So your clothing, your electronics, your furnishing, all of your appliances and things like that. Yeah. Those are things that are yours and you would expect them replaced or covered.
Right. Yeah.
But it's not part of the home. And so you got to have some contents coverage there.
Sure.
And then we have loss of use, which a lot of people don't realize is part of their homeowner's insurance. So if a claim happens and it's severe enough where you can't live there, right? Smoke damage or a huge hole in the roof and you're weather exposed.
Right.
We're going to put you up someplace else, and that might be in a really nice motel, depending on the time frame. Right? If it's a long-term mitigation and renovation type situation, we're going to try to put you up in something that's like kind of quality. You're living in a house.
So it's based on like kind of quality, or is it based on about what your mortgage payments are?
A good policy will be like kind of quality.
So this is one of those changes. Okay.
That's one of those things that you want to ask your insurance agent. Hey, on this loss of use, are you going to stick me in the Motel 8 or are you going to put me up in another house?
Right.
And then most of your bigger top tier companies are going to look at, hey, how long do we need to have you displaced? And if it's long enough, we're going to try to find you a place that's going to maintain that same distance of travel to and from work, to and from your school, so it doesn't disrupt your life any more than it has to.
Yeah.
If you've got a 3-bedroom, 2-bath house, you probably have that for good reason.
That's right. Yeah.
We'll put you up in some place where you can have those same type of accommodations.
Right.
Cram a family of 5 into a Motel 8 and stuff.
Or you at least hope that maybe the call center company might have had a cheaper rate.
You hope that they took those things into consideration.
See, that's good. So that's one example of how those prices can differ. Is based on that's your basic dwelling contents, and that what was it, the third one that you said it's called again?
So contents is kind of your third coverage, and then loss of use.
Loss of use. Okay, so those are things to look for. What are some other things that people should look for in their policies as far as when they're price shopping and comparing?
Sure. So personal liability is a big deal. It's one of the cheapest coverages, and one of the ones that, again, most people don't realize is part of their homeowner's insurance. And so that's coverage for things that are your fault. Would be a good example of personal liability. I had a client one time that was redoing their porch, right? Yeah. And so he had hung the caution tape, and he had his little city permit out and everything. And Melvin came up on the porch, and I'm like, underneath the caution tape, he stepped through a rotted board and cut his head all up. And so he goes home as a government employee. He's got workman's comp insurance through his employer, but still hired an attorney and filed suit against our homeowner. Wow. And so the liability of our homeowner was, hey, you did something that caused injury to somebody else. Mm-hmm. Now, that liability was covered under his homeowner's insurance, but we defended him. So just because you have it doesn't necessarily mean we want you to use it. Sure. So the insurance company reserves the right to come in and defend you.
Oh, wow. And so where you don't have to file. Correct. Oh, that's interesting.
And so, the company will look at the situation and say, hey, how much is it going to cost to defend versus how much
are the bills?
How much of the bills? And is it worth coming in and getting legal involved and attorneys and fighting for this? in that situation, it was super cut and dry.
Yeah.
He put up the caution tape. He had the sign. He had an announcement out by his mailbox.
Oh, wow.
And it was like, you're a mailman. Why didn't you use the mailbox? Why did you come up on the porch underneath the caution tape? And so
close to Halloween. I mean,
it was super cut and dry,
Yeah.
but it still cost significant
Sure.
amount of money to hire the attorneys to defend our client. But that was a clear cut and dry. We know we can win this,
Right.
And so instead of paying out the hundreds of thousands of dollars in medical bills and time off of work, and arbitration, and all the stuff that the mailman was asking for, we said, nah, we'll pay the attorney. We'll pay the attorney. We'll win the case.
We'll win the case, yeah.
And so
it's cheaper that way.
And that again goes back. Not only does the liability, it doesn't drive a lot of premium, but it is something that I see a lot of agents will just minimize. Hey, we're going to put $100,000 in liability coverage. Look, if you've got less than $300,000, which is kind of the sub limit to be able to get an umbrella, your agent isn't doing a good job.
Really?
A lot of times we'll see $500,000 or even $1 million on larger homes.
Right.
A good agent will ask about what kind of asset base do you have? What,
Right. It's kind of like, people, you see it in movies and stuff, or, whatever, where people are in a car accident, if they're driving a real nice vehicle, like, things like that. So that makes that makes sense that they would need a higher level of coverage for stuff like that. Speaking of coverage and premiums, good agents, bad agents, things like that, what about coverage gaps? So are these things that also drive price?
Definitely. So something that we see here in Northwest Arkansas, having this property bubble, right?
Yeah.
Where home prices have just escalated and appreciation. And that's a good thing.
Yeah.
We have to remind our clients when they come in, and, hey, when I insured this thing, it was $325,000, and my insurance is now bumped up to $450,000, and it's like, that's a good thing.
Yeah,
You have equity in your house.
Right. Yeah.
However,
we need to protect that equity.
Protect that equity, exactly.
Right.
And so we expand that insurance coverage to cover those gaps. Most insurance companies will have kind of an automatic mechanism in a policy to bump that 3 to 5% every year, just to kind of help keep up. But your agent in an area like this really needs to be sitting down with you on a yearly basis and talking about, hey, what kind of price per square footage? That's where, as a professional, it's valuable for me to have a real estate broker to know, hey, what is the market looking like?
Right.
Because this property is drastically underinsured.
Yeah, and that brings up a good point. Is something that we do with our agents, and something that we coach a lot of other agents on, is reasons to contact your sphere, right? And so when we see numbers and we see a big change, it's a great time to contact your database, not to solicit business, but to continue to provide service before, during, and after the transaction, right? And saying, hey, I ran the CMA. This is based on, current numbers of what your property's worth if it were to go to market to sell, right? Have you had a conversation with your insurance company lately about your value?
Perfect.
Are you under, and so to prompt that conversation, and then, of course, give a good referral or something like that. But, that's a really great opportunity, I think, for agents out there to take, is when they see big changes and big jumps outside of this, what percent did you say a good agent will usually have them within?
So there's usually an automatic 3 to 5% that your coverage will increase year over year.
That's great. Okay, so like during COVID, when we saw exponential jumps, great time to have a conversation with your insurance agent. That's good.
Most agents will try to solicit, right? Not everybody wants to come in and sit down,
right.
But they'll try to solicit. Hey, once a year, let's sit down and go over your policy.
Right.
Is this still applicable?
Mm-hmm.
So we can get into deductibles a little bit later, but hey, maybe this deductible is something where we can change this because you feel like you're willing to have a little bit more skin in the game if there's a claim,
right,
to minimize when the insurance bill comes up. Right?
Yeah, that's good. I really like that. It's really informative. And I think that one of the additional topics that I think a lot of our agents have questions around, because it's something that we're seeing more and more, because like you said, wind and hail damage in our area has been lot lately, right? And so from our experience, we are talking with the homeowner and ask if when the roof was last replaced, repair, things like that when we take a listing. But a lot of times we don't know that there's damage until an inspector goes out, gets on the roof, and they're like, hey, this roof has a ton of hail damage, right? And so the buyer says, wait, Mr. Seller, we would like the roof replaced prior to closing. And what we're finding is the gap between real estate agents and the insurance industry. There's a lot of questions and it's done differently and things like that. So from a professional's standpoint, in that scenario, and let's say usually, it's as far out as a lot of adjusters are and roofing companies are, a lot of times these repairs aren't happening until after closing, right?
Absolutely.
And it gets confusing as far as who the money is paid to, right? And you don't want to pay the previous owner the money and then they credit, because what if they never do the repairs, right? So can you kind of walk us through from, hey, we found this problem with the roof and it needs to be replaced, from there until the roof gets paid for and done? What is the ideal process for agents out there?
I can give you the ideal.
Okay.
I can give you some words.
Yes, I could do. Yeah.
Definitely. The ideal is, first and foremost, the thing to remember is whichever carrier was on contract for that risk property at the time of loss, they're the ones that are responsible. But you can't sell a property, have another insurance carrier take over insurance, and then claim that's the existing damage, and that's where people end up hating their adjusters because they didn't pay my claim.
Right.
And so the ideal process is for when your agents are working with sellers, hey, one of the first things, let's go ahead and get somebody up on the roof. At the very least, get your insurance agent up there. Now, I'll admit, in our industry, there's fewer and fewer people willing to get up on the roof.
I wouldn't do it. I mean, come on.
I have a drone. Super easy to kick a drone up, take some photography and pictures. I'm not super adept at seeing hail damage on the ground. That perspective, angular change, it's hard to see.
Right.
I'm not an adjuster. I'm not a roofer. Those two industries, they really know.
Speaking of that, do you find that it's helpful to help get a claim through when an adjuster comes out if you have a reputable roofer there with him?
Absolutely.
So that would be a good little pro tip is, when an adjuster is coming out, make sure that your roofer that's going to be doing the repairs is there to meet with the homeowner and with the adjuster.
Yeah. That does a couple things. You'd be surprised how often adjusters learn roofing companies. Right?
Oh, sure.
They learn their reputation. It's like, oh man, they're really, just kind of stretching things and trying to really stick it to the insurance company. Or, hey, this roofer came out, they did their own independent inspection. They wrote up their review. They have a value of what they think this repair is going to cost. And when the adjuster comes in with his numbers, he does his own inspection. When they mirror it up, he's like, man, that roofer is spot on.
Great.
And so they start kind of having a list.
They've
got their green list and they've got their red list.
Yeah.
So
that'd be step one, right?
Absolutely. Have that relationship. I know we have a couple of great roofers in our networking sphere. And so one in particular I know is just phenomenal about getting up there herself. She will get up on the roof with the adjuster, schedule that appointment, and make sure that she's there. And it's important that they're not there just advocating for their business. They're there advocating for your client, your customer.
Yes.
They're making sure that the adjuster, who, let's face it, supposed to be biased and kind of third party, but they're hired by the insurance company.
Right.
And so they're there to make sure that they're not paying anything that they shouldn't.
Right.
But the roofer is there representing the homeowner to say, hey, you missed this. Hey, I don't know if you checked over here. You got complex roofing and a lot of things.
Does this include flashing around chimney?
Absolutely. Gutters and downspouts and
Right.
So
all of that.
a good roofer meeting with the adjuster, letting them not so much negotiate, but kind of talk the talk up there. I mean, they're up there, they're seeing it, it's right there.
Right.
That's where, kind of that decision gets made before either of them go back and write up their report. Once that report's done,
It's hard to get changed.
Oh, it's hard to get changed.
Yeah,
So,
for sure. So have them meet there. And then, so let's say that the claim gets approved, right?
Yep.
And then they say, oh, well, Mr. Seller, we're going to give you $10,000 for a new roof. Where does that process go from there?
yep. So a couple different options, and I've seen it played out successfully in multiple facets. But ideally, the homeowner is going to file a claim with their homeowner's insurance and get the roof repair scheduled and hopefully done before closing. That's ideal.
That's always ideal.
It's the smoothest.
Yeah, it's what we all really want.
Yeah.
But in reality,
roofers get backed up, right?
Yeah.
The catalyst for roof claims are usually storms,
Sure.
and they affect large populations
Yeah.
of people, and so roofers just get way backed up. So when that happens, especially if you're on a short closing, if your customers waited too long and now they're like up against a closing
right?
date,
Yeah.
it's looming.
They're going to lose the rate lock.
There's some opportunities for the realtor to get in and get creative and say, okay, hey, well, we can file this claim and we can, kind of like build that into the negotiations of the contract. And, okay, well, the seller's going to go ahead and get that roof claim started and get it approved and get that in, but we're going to make a concession on that or an allowance on the contract. And so
Right.
I've seen that be successful. What you don't want to do is ignore that damage, and really it's damage of any kind, but
Yeah.
roofs in particular, you don't want to ignore that damage and then have the buyer come in and be really hard pressed because now their new carrier
Yeah.
might not
want to.
they might not even provide coverage, but if there is coverage, they might have a really hard time getting that roof approved.
Yeah.
If they do, what I've seen, that new company will come in and say, hey, there's obvious damage here, but this damage looks dated. And so what they'll do is they'll contact the previous owner's insurance company and say, hey guys, this damage occurred on this house. It's dated. Y'all were on, you were on this risk at this time. And so it's kind of your responsibility. Again, harder to sell when that company's like, yo, we got out, we were off that project.
Right.
And it's like, oh, okay, we're going to get drugged back into this.
Right.
But it is possible.
It's good. When a claim gets approved and the insurance company goes to distribute a check, right? Say the $10,000. Or do they typically make that out to the roofing company? Do they make it out to the homeowner?
Yeah. I would never recommend making it out to the roofing company. Always make it out to the homeowner. And any additional insured or financially responsible for that property. So that would include like a mortgage company. If there's a second mortgage on that, right, they would have that. And so you'll get a roof check in and it's like, okay, me and my spouse and the mortgage company all have to have this signed.
Yeah.
And so again, working with local people is great because you can take it to your bank or your credit union and have them sign it. But if you're working with like a Rocket Mortgage or something, you're sending that check off, hopefully certified mail, out to get a company who knows where they're based to sign that check, send it back so that you can cash that.
Yeah, that's good. That's good. Any top tips do you have? Any pitfalls? Any, last words of wisdom that you could offer?
Education is huge. Working with agents, whether real estate agents or insurance agents that know the industry, they're committed to that lifelong learning of just constantly being a student of the game, knowing what's happening in your industry, knowing what's happening in your market, knowing, having experience of, hey, I've been there, I've done these claims. And so that is valuable perspective. And it really helps navigate when you have these unfortunate events, not to fall into those pitfalls.
Yes.
Educating clients is probably the funnest part of my job. I love correcting people when they say, oh, hey, this is Sean. He's an insurance salesperson. I said, no, I'm an educator. And that's why they call us agents. And I really want to be an advisor for clients, not just a salesperson. Right?
And, it's kind of it's Pareto's principle. It's that 80-20 rule, right? And so when you find the 20% that's really good at what they're doing in educating their client, it makes such a huge difference. And that's why, it makes such a good referral.
Yeah. Well, you hit the nail on the head when you were talking with Adam earlier. It's having that relationship that you, as the realtor, feel comfortable with being an extension of your customer service.
Yes.
Because when I get a referral, I'm like, wow, my name might be on my door and my name might be on the contract that we're signing, but I'm representing Elizabeth Rowe and her team.
Yeah. Yeah.
And so that causes me to constantly step my game up and want to make sure that I'm there for your customer, my client. And it just makes a great cohesive relationship. We try to focus in my agency on knowing what the process looks like from start to finish. And so, hey, I'm just the insurance guy. I'm going to stay in my lane, but I know the real estate transaction. I know the banking, the lending process behind it.
Yeah.
I know what the title company, what their checkpoints are.
Right.
And so I know where we fit in, and I know where a lot of times, hey, if the customer's not doing what they're supposed to on the time frame, I know where the pitfall is going to be.
Right.
So by the time it gets into insurance agents' hands, it's kind of toward the end of the process.
Mm-hmm.
But you hit it earlier too. It could blow everything up. It could delay.
And a lot of
closings.
times it does. Yeah.
And so I never want to be the cause of that. Everyone's trying to close this file up and get paid and move on, and the clients are looking at the dream home, and you don't want the insurance agent to be the one that blows it up. So
Sure.
we try to know where we fit
Right.
and where everybody else is in the process, so that we can make it as smooth and cohesive as possible.
That's good. And that's really a great reason to explain why in our Arkansas contracts, we have a time constraint on the buyer for the amount of time that they have to apply for their insurance. And it's not just from a matter of, is that person insurable, right? Because we all know that the person can be insurable or not based on claims, based on a lot of different things, right? There's a lot of factors that go into that. But also, is the property insurable? And sometimes one may be and the other might not be. And so I think that's just another great reason why to have, a quick resource for a referral of a very good insurance agent. Well, guys, our time has come. Thank you so much for joining in today on the Rowe Report. I hope that you had a great time with Sean. I know I had. Thanks so much for being here.
Thank you for inviting me.
Yeah. We'll have to do it again soon. We'll see you back here next week to help you think, feel, and act like a pro.